Welcome back, everybody. Today's stock we're looking at is Pfizer, ticker symbol PFE, which is in the pharmaceutical industry and has a current market cap of $183 billion. Now, before we get into looking at the company, I ask that you please like and subscribe and leave a comment down below the video of what you think about Pfizer or any other stocks in the market. I'd be happy to take a look at them. Heading on over to the company's website, we can see that there are tons of different products that this company has, literally hundreds of different pharmaceuticals, and they are one of the largest pharmaceutical companies in the United States. To back that up, we see that the company has treated over 356 million patients in its lifetime. That's a huge number, and that's only set to increase with the number of medications that they have in their pipeline. I do want to point out this big red arrow down here, this negative 53% is in their total revenue operational decline, and that is because Pfizer was one of the major beneficiaries of COVID-19 and the vaccination process. Now that COVID-19 is not nearly as dangerous in our lives, and people aren't getting boosters anymore, the company's experiencing some major profit withdrawal, and that is going to be a theme throughout this entire breakdown. If we continue on, we can see that Pfizer has several different products in the pipeline. They have tons more medications that are either approved and about to go to market or waiting for final approval. What we do see is that their revenue contributions of these largely begin in the second half of 2023, so coming soon, and they should continue through 2023, 2024, and beyond. There are lots that are still waiting for approvals. This is a risk in the pharmaceutical markets. Not all of these medications can be approved. So that's something that we need to be aware of. These are listed here as potential approvals and likely approvals, but that doesn't mean they will be approved. And that could mean a lot of sunk research and development costs for the company for absolutely zero return on revenue. Moving on to some recent news, there was a release that said that Pfizer's new drug for COVID, Paxlovid, is less effective in early trials than originally thought. This led to a major down move for the company's stock because, of course, there's hope that Paxlovid would bring in more revenue for being extremely effective. According to Forbes, it's still great at preventing deaths. If we go down to the article here, we see that their treatment, Paxlovid, is 37% effective at preventing hospitalization or death in high-risk patients compared to no treatment. Obviously, we would like to see that higher. The 88% effectiveness is what was shown in 2021, and that would be amazing. But still, for certain patients, that 37% increase in prevention is probably a good risk for them to take. And so Paxlovid is still likely going to be a successful drug, but not nearly as successful as what was originally expected. To add a little insult to injury, Merck, a competitor of Pfizer, has a drug that is 42% effective at preventing hospitalization and death, which is, again, slightly higher than what we saw above from Pfizer's Paxlovid. The other issue is we don't know why the effectiveness has fallen. There are competing ideas, but nobody has shown for sure why. Some believe it's just because of clinical trials versus the real world. Other people believe that it could be because of the evolution of COVID, with Delta variant, Omicron variant, etc. There's always a new variant coming out, so maybe those variants have gotten stronger. But kind of a double whammy that the effectiveness is much lower than expected, and a competitor, Merck in this case, has a more effective drug. And then this isn't exactly breaking news, but recently Pfizer did buy Seagen for $43 billion. Seagen's ticker symbol is SGEN, in case you're interested, and they did so to get access to cancer drugs, which the company sees as a major growing market. And we see why Seagen was targeted by Pfizer, because Seagen's drug Adcetris, which treats lymph system cancers, brought in $839 million in sales last year, which was a 19% increase over the year before, showing that there's still tons of room for this drug to continue to grow and bring in more revenue for Pfizer. Seagen and Pfizer also had a previous deal leading to a cancer treatment called Tukysa, which brought in $353 million in sales for Seagen last year. And to top it off, Seagen's revenue grew by 25% last year alone. The company has a huge runway for growth, and Pfizer sees that, and they want to execute and get the company now while its valuation is still relatively low. The acquisition of Seagen is expected to be so beneficial, in fact, that the company expects it will deliver $25 billion in incremental revenue to Pfizer by 2030. This, on top of different synergies that could come from production, means that Pfizer could be sitting on several billion dollars more in savings along with this incremental revenue growth. Now that we've seen the headlines driving Pfizer's recent performance, let's take a look at their underlying balance sheet and see what we can find. Looking at the company's revenues, we see a huge spike thanks to COVID and the products they developed for the COVID pandemic, but that number is coming down in the trailing 12 months and is expected to continue falling because, again, COVID is just not as big of a deal anymore. I do expect this number to fall back down to this $40, maybe $45 billion range. So there is still plenty of room to fall, and that's why we see the company's stock continuing to fall. EBITDA again sees a massive spike due to COVID, and we do expect this to continue to fall towards its pre-COVID trend line around 13, 14, maybe 15 billion. Gross margins for Pfizer actually fell during the COVID pandemic, and this does seem to be rebounding slightly, and I would expect this to come back to that 70, maybe 80% range. Their operating margin, on the other hand, did see an increase, and I would expect that to come down to a more normal range again in the high teens to low 20s. Pfizer's return on assets have been generally stable, and I expect it to remain that way, probably in the high single digits. And again, operating earnings shows a major spike, and I would expect this to come back down to more normal levels in the $1 to $2 range. Since 2018, Pfizer has bought back a small number of its shares outstanding, but we do see that in 2019 through the trailing 12 months, the company has bought back some shares and issued some shares. So there's really not much change in the shares outstanding. So there's not much growth from this company driven by share repurchases. The company does have a lot of cash and short-term investments on hand, which is actually really nice to see. We do want the company to be taking advantage of the profits they've made from COVID and investing them somewhere where that's going to make an exceptional return like we see and hope from the Seagen acquisition. Now, due to that acquisition, we do see a major spike in the company's long-term debt, although I would like to point out that the company has shown that it manages its debt quite well and does pay it back over time in general. So I don't expect this major spike to be a long-term issue for the company as long as they don't continue to issue more and more debt. Looking at Pfizer's annual net interest expense, we've seen that it's gotten very, very small, and that's just due to a payoff of short-term investments. I do expect this number to go down to a more normal level, probably even lower than what we see in 2020, 2021, due to the recent acquisition of Seagen and having to take debt at a higher rate than what was available in 2020 and 2021. Still, I don't see this interest expense being anything super detrimental to the company, but it is something to watch. We do see that Pfizer's annual levered free cash flow is a little bit more unpredictable. That is normal due to a company that's doing a lot of acquisitions and also has long-term product pipelines. So it's nothing concerning for me to see that it is unpredictable. I would obviously like to see something continuing to rise, but due to COVID normalization, we should expect to see this free cash flow start to fall, maybe stabilize a little bit before it starts picking back up again. Free cash flow per share shows a more stable scenario, but again, we're probably going to see some normalization and some stabilization of free cash flow before we see any sort of growth in the future. Pfizer does have a very strong dividend history. Its current 5-year dividend CAGR is 4.5%, which isn't great, but it is stable, and I expect the company to be able to continue to do this into the future. We do see the stability in the company's dividend payout ratio, which we see can fluctuate greatly, but it does generally hover in the high 30s to 50% range, and that is excellent for future dividend growth. So heading on over to the value chart, we see that immediately something isn't looking right here. The fair value PE is set to 55.7, and that is just due to the extremely low earnings in 2018 compared to the extremely high earnings in the most recent calendar year. So what I'm going to do is I'm going to set that to 15 because I do believe that Pfizer is a company that is not growing fast enough for a premium to be put on the company's stock price. So if I set that to 15, what we see is that currently Pfizer is looking quite undervalued. Again, this purple line is based on the earnings of the most recent year. And so I would still caution and say that this number, this $56 in fair value, should come down in the future, and we should expect it to come down in the future. Pfizer's current PE is 8.69, and I think that does reflect a lot of the future uncertainty about how it's going to stabilize following COVID. And what we can see is that many analysts expect this company's growth to contract by 13% per year for the next 5 years. That is extremely, extremely fast contraction. And like I said, there's going to be a normalization process that occurs following COVID. But to fall by 13% per year for the next 5 years means that this company is expected to lose a ton of earnings. It is this expected drop-off in earnings that has led to such a low PE and why I think that Pfizer's PE could probably still go much lower. So why would I invest in Pfizer? Number one, it's a pharma giant, and it has shown that it's capable of rapidly developing and deploying new drugs. COVID was the perfect example of this. In under a year, Pfizer was able to develop a vaccine as well as a treatment, and they were able to market that treatment and make a decent amount of profit on it. That's not something that any company in the world can do. There are very few pharma companies that are able to do something at such scale like Pfizer did during COVID. Number two, Pfizer is a cash machine. It does generate a ton of excess free cash. As we saw, they can use that free cash to make large acquisitions for future growth, as well as pay back a stable and growing dividend. And three, I like that the acquisitions show that management is working to expand their product pipeline. They know where their deficiencies are, and they're trying to address those deficiencies. They're also putting the profits that they earned during COVID to good use because they know that these profits are not going to be consistent, and they need to execute now before they lose their opportunities. Their acquisitions are also focused on growing industries such as cancer treatments, which I do believe is something that's only going to continue to get more profitable for the company. So I do like that their future is set on high margin, high growth industries such as cancer treatment. So why would I not invest in Pfizer? Number one is that its COVID normalization is still playing out. There is a lot of negative news coming out about the company's revenue growth, about the company's earnings growth. We did see that they're expected to fall in earnings by 13% per year. That is a terrible number. I do think that it's overly bearish, but market sentiment is very bearish for the company in general, and we don't really know how that normalization is going to end. So there's a lot of question marks about where Pfizer's cash is going to be coming from, and its current PE ratio and its current market sentiment reflects that. Number two, Paxlovid, its COVID treatment, is underperforming in the real world. As I showed earlier, it's not as effective as clinical trials initially suggested, and competitors have more effective treatments. So this means that all of that money that Pfizer spent developing this drug may go nowhere. Again, not something you want to see. It's a risk that you take investing in pharmaceutical companies, and it's a risk that's currently not playing out in Pfizer's favor. And my third reason to not invest in Pfizer would be the double-edged side of acquisitions. Acquisitions lead to high debt, and they also have product uncertainty. These are products that are still in the pipeline, and we don't know if they're going to be effective in the real world. We don't know if a competitor is going to come out with a more effective alternative. So Pfizer is essentially taking on a large amount of debt for a bunch of question marks. And yes, these question marks are generally expected to create money for the company, but we don't know that for sure. And so that uncertainty can be really difficult to invest in. So what am I going to do for Pfizer? Me personally, I'm going to continue to sit on the sidelines. I want to see Pfizer really, really drop hard. I think that it's a company that if you invested now, you'll probably make decent returns in the future, but I think that there's more downside to come, and I want to see that COVID normalization play out. I want to see this negative news continue to play out before I start investing in Pfizer. So that's my review. I hope you enjoyed it. Please let me know in the comments what you think of Pfizer. Are you going to invest? Are you not going to invest? And if you have any suggestions for future stocks to look at, please let me know. And with that, I hope you guys have a great day. Bye.